Welcome to the GFF 23 show. This podcast brings you a taste of the Global Fintech Fest organized by the Fintech Convergence Council, Payments Council of India and National Payments Corporations of India, happening in Mumbai from the 5th through the 7th of September 2023. Over the past 3 years, GFF has grown to become the largest fintech summit globally, demonstrating the pivotal role of fintech and driving sustainable global advancement by showcasing a 360-degree view of its transformative potential. Today we have Mark Wiseman, Chair of the Alberta Investment Management Corporation, one of Canada's largest investment managers with $160 billion of assets, and ex-President and CEO of Canada Pension Plan Investment Board. Having a one-on-one with Neetu Chitkara, Managing Director and Partner at BCG, Neetu and Mark delve deep into the investment climate globally, specifically for fintech startups, the importance of choosing the right partner to grow your business, and how one of the biggest challenges faced by the fintech industry is the adoption of technology to aid the user in their daily financial needs as opposed to traditional banking practices. Boston Consulting Group is the thought leadership partner for this episode.
Hi, and welcome everyone to this podcast for the Global Fintech Festival. The word fintech itself is barely a generation old, and yet in this nanosecond of history of its existence compared to human history, it has already made a huge impact touching billions of lives. So I wanted to start, Mark, by asking you, given that you've seen this as an investor over the last 2 decades, about your perspectives on the growth of this industry.
Well, look, I'm delighted to be here and to be part of this really special event. And, as an investor, fintech is something that, we have to pay attention to. We have to pay attention to it, not just as an opportunity for us to invest, but also our own industry and seeing how it may affect asset management, the investment industry in general. So fintech actually plays a very important role in almost everything that I do.
Fantastic. And while the sector has its importance, how do you see, let's say, investments within a sector? I'm sure as an investor, it must be really difficult to differentiate between real innovation and, sort of the cool, shiny thing.
Well, look, I think that's one of the things that's very hard as an investor, because there is lots of cool, shiny things out there. We read about it. Some of us use it. We all want to have a piece of that, as you say, that new shiny thing. One of the things as an investor that's very, very important to understand is that not everybody's like me. And I think in fintech in particular, where you have early adopters, people that are technologically savvy, people that understand how to use technology, there's sort of a belief that everybody in the world, that every consumer is going to adopt what you're doing exactly the way that you've adopted a product or a service. And that actually makes investing, you have to be very, very careful in that regard. I remember in the early days of the BlackBerry, I'm Canadian, and I remember the early days of the BlackBerry, I asked my investment team, I said, how many of you have a BlackBerry? And of course, we all had BlackBerry. So everybody put up their hand. And then I said, well, how many people in the world have, there's 100% of the sample size here has a BlackBerry. How many people in the world have BlackBerrys? And it was only about 300,000. There'd only been about 300,000 BlackBerries sold. And so you have to remember, I think, that not everybody is like me, right? Like you are, especially if you're in the industry or you spend a lot of the time in the industry, it's very easy to believe that the entire population, the entire world has adopted the same habits, has been an adopter of technology, is a user of technology the way that you are. And at the end of the day, of course, that's not true. And so doing the research, really understanding adoption curves, really understanding, what is the real use case for the average human being, not the technologically savvy tech investor, because at the end of the day, you have to make money off of average human beings, not just the savvy tech investors.
Yeah, and I can see that, in fact, within India itself, right? There are so many Indias that exist. So I guess that makes it even more complex. So are there any tips on, how do you actually look at winners in an industry versus not?
Well, I think you really have to do your market research. And also, part of sort of venture investing is not trying to pick every winner. You have to make sure that you're diversified in the way that you invest. You have to be focused on a sector, but you also have to then be able to have that detailed focus on part of the market, and then lift yourself up and look at the bigger picture. And as you say, India is sort of an example in and of itself. As you say, there's many Indias. There's many parts of the country. There's regional disparity. There's obviously massive economic disparity. There's even disparity in education and literacy around the country. And at the end of the day, you can't believe just because you've invented what you think is a better mousetrap, that a billion people are going to adopt it. It's simply not the case. And so one of the ways that I think investors, specifically in this industry, what you need to do is not just find that one winner. You have to diversify your investments, because it's not always clear who is going to emerge as the champion.
Very interesting. And also, do you see this, change over time? So let's say the benchmark, for a VC change, let's say, in the winter versus not. I remember doing this, a similar session last year, and the funding winter had begun to set in. And now, you can already see that in the numbers. 2021 was, $140 billion of global funding in fintech, and, 2022 was already $80 billion. So how do you see this play out over different times?
Well, look, there definitely is a cycle to the market. There's a cycle to the availability of capital. There's a cycle to raising that capital for VCs, for example. And we're certainly in a cycle now where capital has become much, much more scarce. So it wasn't that long ago that deals were scarce and capital was chasing deals, right? You'd have an idea, you'd write it down on a sticky note, and suddenly 6 VCs would show up with term sheets, right? And that's not happening anymore. And we're in a cycle now where capital has been more scarce. Has become more scarce, where now deals are chasing capital as opposed to capital's chasing deals. It's taking longer to go from term sheet to deal. The terms, the pricing, the conditions are becoming more difficult. And so I think if you are an innovator, if you are a founder, it is going to be harder to get your idea funded than it was previously. Unfortunately for the founders and innovators, I think that this cycle may persist for longer than we think. Ultimately, the capital that is available to invest in fintech and other forms of technology comes from institutional investors. Those institutional investors today are more cautious, they're risk off, and with rising interest rates, they're able to deploy capital in a less risky way and still make in some cases, a sufficient return to fund their liabilities. So as long as rates remain high, as long as institutional investors remain risk off in nature, that's going to flow through. It's going to flow through to the way that they allocate capital. That's going to flow through to the funding that VCs get, and that's ultimately going to flow through to the capital that's available. So what does that mean? I think as an innovator or an entrepreneur, it means that you have to be, more conservative in your business model. You have to be more conservative in terms of your rollout and how you're going to spend, how you're going to expense and spend how you're going to manage your expenses and spend money as you are in a pre-revenue stage. So I think this is going to require a lot more discipline on the part of entrepreneurs and founders than it has historically. And I think this is going to persist. Not necessarily a bad thing, but people are going to have to work harder and sharpen their pencils.
Yeah, I mean, I can already see that, right? That there is a lot of, I would say, optimism over the long term. Like we are seeing that fintechs themselves would be, 9% of banking revenues and 25% of, valuation compared to the banks. So there by 2030. So there is a great, kind of story out there. But if I'm the founder at this point of time, I can already, see the pinch. So I guess, at this point, I guess not being that picky, about valuations. Do you think that's what it means, or what do you do?
Well, I think you're right. Like, I think you can't be too picky about valuations. You can't be too picky about terms and conditions, but you still have to in my view, be very picky about is who your partners are going to be. So I think having a capital partner, in fact, the capital or the money is just part of the equation. I think what's always been important, and in times like these is increasingly important, is to have the right partner who can help you grow your business. So I'd encourage entrepreneurs and founders to think really hard, not just about the quantum of the capital that they're bringing in or the cost of the capital they're bringing in, but as importantly, the who is providing that capital. How is that capital provider going to help me in other ways grow my business? What type of connectivity are they going to be able to provide me? What type of advice are they going to be able to give me? What type of introductions to customers or other providers of technology are they going to be able to show me? What is your experience in working with people like me in the past? And how has that gone? I mean, in terms of mentoring the development of my business. And so I think that, when capital is scarce, the mistake that entrepreneurs and founders can make is saying, well, I'm just going to take the money from anybody who can provide it, or I'm just going to take the money at the highest valuation no matter what. That's short-term thinking. In the long run, the quality of the partner you have is as important as the quantum of money or the valuation.
Particularly when there's a bumpy ride. So you want to make sure you have the right partner next to you. I can relate to that. Yeah. And are there certain areas within fintech that you're more bullish about, Mark?
Well, look, there's a whole bunch of areas, and most people tend to point to payments as the big space. I look at the industry that I understand the most, which is asset management. And I still think we have a long way to go in terms of innovation and applying technology to asset management. Now, it's a tough area because, like many things in fintech, it is highly regulated in spots. That makes it sort of more difficult to break into. But I still think we have a long way to go in asset management, and I'm seeing a lot of innovation today taking place in the asset management industry. And by the way, I think this is a very good thing. And I think it's a good thing for the retail saver in particular, because he or she today is still paying fees that are too high, still don't have access to the types of products, investment products that more sophisticated investors have, and still is living in a world without the full ability to adopt and utilize technology. So the one area I'm spending a lot of time focusing on, and obviously I'm closest to it, is what's happening in asset management, and particularly in the democratization of asset management down to ultimately the retail investor. And I think there's a lot to be done there. I think there's a lot of innovation to come, and I think there's a lot of money to be made.
So, let me move, to the last question. And I would be really amiss if I didn't ask you this, that, we in India are obviously very optimistic about the kind of developments that are happening in India. UPI obviously has made its mark, across many other nations as well. How do you see this, sitting outside? What's your views, looking at the India story from a bit of a distance?
Well, those who know me know I've been a big India bull for a long time. And in fact, the institutions I've represented have had great success investing in India. And I continue to believe that India is going to outperform, probably not just outperform other markets, but probably outperform its own expectations. I mean, this is India's time. One of the things I would say that's unique, and you talked about UPI or Aadhaar, if I'm pronouncing that correctly, I never quite got it. Is it Aadhaar?
Aadhaar, yes, Aadhaar. It's Aadhaar.
Yeah. So look, you've talked about UPI and you've talked about Aadhaar. It's remarkable what that has unlocked, particularly in fintech. And it wasn't designed for fintech, right? It was designed for broader identification means for individuals. But it took the government doing something. It took the government to push that through. And then the knock-on effects of that have been huge. And that's one of the things I think we forget sometimes in fintech, that ultimately it often takes government, a change in regulation, the adoption of technology by government, to really, really open things up. And I think it's a great example of where India has succeeded. It's the only country in the world that has this type of identification system. especially one that is so universally adopted. That's opened up the opportunity for fintech. I mean, when it was designed, no one thought about it as sort of people thought about some of the applications, but never the number of applications that you have today. Why is that not happening? Why is that same? Why can't you buy a banana with your biometrics in the United States or in Canada, for example? Well, it's because we don't have the same system that India has adopted. So many times it takes a big move and a bold move by government to sort of unlock private sector opportunity, whether it's adopting something like Aadhaar, or whether it's removing regulation of some sort and allowing competition or access to a market. And I think India's actually done quite a good job in this regard. It's been bold. People talk about India being slow and bureaucratic, and for sure that is true in many sectors. But I think when it decides to move, it moves decisively. And when the government moves decisively, it really opens up sort of a tidal wave of opportunities. And so I think this is India's time. I think it's now up to the private sector to decide what it's going to do with those advantages, and investors to see what they're going to do with those advantages to create additional return and ultimately wealth for the country.
Fantastic. And we're looking forward to that in the next 5 years as well. I think you've already seen the UPI story. There are many others which are, I would say, at the sidelines and, are just waiting to come into the spotlight. So yeah, it's going to be an exciting 5 years ahead. Thanks.
5 years and beyond for sure. I'm delighted to be part of it, and hopefully can deploy some capital in the country, but most importantly, I'll be watching India's continued success, particularly in the fintech area.
Fantastic. It was very nice speaking to you, Mark, and thanks everyone for listening in.
Thanks, Neetu.
We want to take this opportunity to thank Neetu Chitkara, Managing Director and Partner at BCG, and Mr. Mark Wiseman, Chair of the Alberta Investment Management Corporation, for taking time off their schedule to bring you this episode. Thank you for listening to this episode of the GFF 23 show. If you've enjoyed this, make sure to tune into the next episode releasing in just a few days.